A little earlier this morning, I was working on a particular client, and so I'll kind of walk you through the order of events and how all this works. But basically, it all starts with a very simple and straightforward um, LLM prompt. So like everyone's using AI at some level. Everyone's pretty good at prompting right now, but the better you get, the better the inputs, the better the outputs. And I'll just kind of walk you through what I was working on. So, for example, a pretty straightforward client that I was helping somebody with, 57-year-old with a net worth of 2.5 million, who's investing 750K in the account that I'm going to be helping this guy manage. He has a moderate risk profile and plans to retire in 8 years. Very standard, run of the mill, tail end of the boomers client. Everybody's wealth book, I'm sure your book as well as mine when I was in the industry, is full of clients exactly like this. You can see on the right here, we are able to set the target cash allocation. Um, every firm has their expectations around cash allocation. In this case, I use 2%. What do you guys use at your firm?
Standard about 1.
1. Okay. So you can scale that up or down as you need to, depending on the client, depending on your fee structure, depending on the relationship. You can scale that up and down. And then the other thing I would say is that you can set their risk level. So every firm, and including every advisor, kind of has their own favorite way to do KYC. But at the end of the day, you end up with basically a scale somewhere from 1 to 10. This was a good way for us to make it uniform for anybody in the industry. So no matter what your KYC process is, if you can boil it down to something that's roughly, say, an aggressive growth would be a 9 and 10, moderate growth is somewhere between 8 and 5, conservative is somewhere between kind of 5 and 3, and then you try to avoid 1 and 2 clients wherever possible because it's just bonds and there's not a lot of juice in bonds, right? You know that. So that's kind of how we approach that. Every firm has their own. Let me just put the guy's name in here. It's David. Yeah, so you can see I just prompted it based on his information. Normal KYC asset gathering stuff. What the kicks out is really what differentiates Altitude AI from all the other LLMs that are out there. We've all seen Copilot and the junk that it puts out. ChatGPT is no different, but this actually has business rationale behind it. So when I say it has business and portfolio rationale behind it, what I mean is the Altitude AI is built, and we're actually in the midst of a patent on it right now, is it applies macroeconomic structures that pioneered by Ray Dalio, but used by many others, based on current headline news that's updated every day. It scrapes through the financial headlines to determine whether we're in what regime we're in from a macro perspective. It does modern portfolio theory-based analysis and node-based correlations. So it does the exact same work that a CFA with all of their models would do. And it does that all in the background in order to produce a portfolio that is justifiable and sound in the exact same way that if you spent 2 hours with a CFA and said, go build me a portfolio and come back based on these parameters for the client, it delivers those exact same results. And frankly, based on some significant performance histories, better results. And you don't have to pay a CFA to do it. And it does it within minutes. So you can see I put this prompt in at 9:40, and it came out at 9:47, right? So what it does, so based on this prompt that I put in, based on the 57-year-old, 750K to invest, it talks through the exact client parameters and the client's profile, talks through the rationale is trying to strike a balance between growth potential and capital preservation. Client's 8 years from retirement. That makes sense. Initially, I had the risk scale set at 5 to 10. It kicks out this specific portfolio with some AGG, Schwab's bond market, a little bit of international exposure, some emerging markets exposure, and then some more high yield bond exposure. It talks through the exact tickers and the allocation, and then it speaks to the cash allocation. So it kicked out a portfolio that is justifiable, just like as if I'd asked my portfolio management team at my firm to do it. But I had some feedback for it. And so the feedback for it was I'm targeting about 12 positions. I've updated the client's risk profile and cash allocation. So those are toggles that I used over here on the right. It says, thanks for the update. I upped the risk allocation to 7, right? You could see that was almost entirely bonds. So I upped the risk profile a little bit, moved the cash allocation to 2%, and then targeted 12 positions. And out it produced a portfolio. So it kept some of the original positions, but also added in quite a few more, some high yield bonds, a tech ETF, etc. And then provided a significant amount of proper justification. In addition to providing these details here, it also actually builds the portfolio for me in the portfolio segment. So if you look at the assets, it actually builds the exact portfolio and it tells me the allocation that it is. So as well as a price range. So I can pull these specific tickers and actually build it for them manually, or I can export this exact portfolio with these exact weights and allocations, right? And then give that to my trader to actually fulfill, or my assistant to actually fulfill, or I can do it myself in my trading platform. And then after it built this portfolio for me and did all the justification, I'm pretty happy with it as a wealth advisor. I say, yeah, this is the portfolio I want. I can put in as many more additional prompts as I want. So I really get it to exactly what I want it to be. And then once it's done with that, I say, okay, great. Now write my suitability notes for me. The client's name is, Jimmy Doolittle is who I used here, just as a dummy name. And it actually writes the suitability notes that I can then copy and paste over into my CRM. Rough estimate, how much time a week do you spend writing suitability notes when you build a new portfolio? Oh, did I lose you?
I would say a good amount. Sorry for that. Yeah, I would not say that, I'm particularly building these portfolios from scratch most of the time. Most of the time is spent on the notes. So having to go back and track down like why the portfolios are the way they are when the client references. That's a lot of my time before, being able to jump right into the client.
Yeah, hold that thought. I'm going to come back to that because you're not the first person to say that. Yeah, so the amount of time that we as wealth advisors have to spend documenting work that's done already, and then getting those documentation back from the compliance guy who says, or girl who says, you missed these 2 things or whatever, to be able to just have it all done within seconds is huge. And as you can see, the whole exchange took less than 5 minutes less than 10 minutes to complete. And that's from build me the portfolio all the way through to compliance notes. So any kind of questions there in terms of like the LLM process? And then I'm going to go to a specific scenario that speaks to a portfolio that you have to write notes about. But any questions on how to build a portfolio from scratch, or the allocation logic?
No, it looks very, very productive.
Yeah, it's the amount of time that's saved is frustrating to every branch manager I talk to. Is like the amount of time I have to spend going through notes and wasting my time on this nonsense is so frustrating. It's all time my team isn't spending hunting and gathering. Another thing I'd highlight is it can show the historical performance of the portfolio, right? So if you want a little bit more juice or a little bit less juice in the portfolio, you can dial that up. And then you can add a personal note for yourself. So the reason I would bring that up is I named this portfolio David Gibson, right? And so I'm going to save the portfolio. And then immediately I can come back to this portfolio again. So right here, I can just click into David Gibson and pick up exactly where we left off. So fast forward in our brain to our quarterly review. Oh shoot, I haven't really talked to this client in a while. What am I going to say to them? We've all had that kind of panicked moment. Immediately, I can just pull up all of my notes, all the documentation, and then start to ask the AI any sort of questions I want about the portfolio based on updated news. So that's a very, very unique opportunity. The other thing I would say is, like, you talk about so many advisors like have pre-built models that they have to use, and you kind of alluded to this a second ago about how, like, you've got to go back and reference it. You've got to figure out what was talked about at the time. You got to use that portfolio to kind of manufacture an answer. The portfolio is built by a model, whatever it is. So we kind of planned for that. So if you want, let me just close this really quick. If you want, what you can do is you can upload. So you've got clients right now, they're in model portfolios. Every firm has their own, but just for the sake of this conversation, let's say you've got like kind of a hot, medium, cold, right? You've got an aggressive growth, you've got a growth, you got a moderate growth, conservative, and then like a 50-50 or whatever it is, or maybe a dividend portfolio. All you need to do is just upload any of those portfolios via a CSV, and I've got one right here. This is just an example portfolio that I use for testing, just to kind of be illustrative. And what it will do is you can upload that portfolio. You can see it's detected the shares and the SKUs, as well as the quantity of shares of each based on that CSV. So those all get uploaded. Super handy, right? Set the client's risk level to, say, a 6. And then once it's all uploaded, I can say, so this particular position, let's say that's their like former employer. Let's say this position is something that they were very high conviction in and they bought passionately and they don't want to sell. And the rest I'm willing to make trades on, right? So I can analyze allocation, and it will build a portfolio that meets their risk tolerance, and trades those specific positions, right? So it says, all right, based on the total portfolio value, I have this much to play with, but I'm not going to trade those because I've locked them. In your case, because you're using model portfolios, you'd probably lock all of these. And this isn't a rational portfolio, so I wouldn't advise you to copy this. This is literally just an example I threw together. But you can just step it. It shows that you can upload the portfolio, analyze it, and it will kick out a specific long form analysis that you can then share with the client. You can bring it up in client meetings. You can migrate it over. You can ask it to write your compliance notes for you, and it'll write those notes for you for suitability for all of your clients. So rather than having to build them all by scratch or prompt it to build a portfolio, you can use the model portfolios you already have built and ready, right? That means that like it's going to be 15 minutes to migrate your entire portfolio into a system like this versus having to repaper accounts or do anything crazy like that. Which, as you know, you probably had a repaper account or two in your day. Not the most fun thing in the world. Yeah, so I've got a full breakdown of the portfolio, and then I can say, all right, we're going to set this client's risk allocation or risk tolerance to 8. You said you use like 1% for your cash allocation, and then I'll say, let's say, write me one paragraph. Write me a paragraph analysis of this. And then make sure you spelled everything right because you were typing too fast. We'll give it a few minutes, and then it'll kick out some things to be thinking about, or things to talk to the client about, or things to email the client about, what have you. So it does so much of that work that sucks up so much of our time and means we're not out there hunting and gathering. But our clients still feel loved, they're still getting touched, and they're actually getting useful insights that are based on market analysis instead of random drivel from ChatGPT that doesn't understand the difference between bullish and bearish if you used it. Have you been using many LLMs or ChatGPT or anything in your portfolios yet, or in your like kind of business?
Yeah, tempted to use Copilot. It's what's authorized by our current company. Yeah, it's just not great. I would say it gives me as many spelling mistakes as I give it. And definitely not in the tone I would typically speak. So I spend any amount of time I've used it, I spend just as much time correcting it.
Yeah. Literally everybody I talk to says they either have to use Copilot or a few people are allowed to use ChatGPT, but the outputs just aren't purpose built for what we're trying to do here. Like wealth advice is such a niche and jargon heavy industry. None of it works. And kind of to that point, we've built the model Altitude AI to be smart enough to tell you when we're not sure, which helps limit hallucinations and keeps us from putting our foot in our mouth a lot. And so it will tell you quite clearly like how confident it is in the response versus not confident. So we would rather say, hey, we're not 100% sure and we're not going to say something stupid. You're going to have to do this one on your own versus just make up a bunch of dribble. So that high confidence document, like indicator right there, will tell you immediately how much time you do or don't have to spend going through this kind of insight with a high fine tooth comb. So you can see it's bringing out notable features in the portfolio, discusses the aggression, et cetera, et cetera. So this will give you some good nuggets to share with your clients and kind of educate yourself on a portfolio on a portfolio that's built by your model managers. To get this kind of insight otherwise, at least when I was in the industry, you got to pull up the client's portfolio, email your contact to the portfolio management team, hope they get back to you that day. They may or may not get back to you that day. And then if they do get back to you that day, they're going to send something that's so jargon heavy, it's not going to be useful. Or that's I don't know, sometimes 12-hour exchange, next business day exchange, the whole time your client is biting their nails off and frustrated that you're not getting back to them with reasonable portfolio insights because the market took a dip or whatever it is. So something to think about there. Any kind of questions around kind of portfolio construction or how you would upload your own model portfolios and start to do analysis on them?
No, I mean, maybe we can take an example directly from one of the clients I'm currently talking to right now and see
Yeah.
if.
Who are you talking to? Let's do one.
All right. Doing a financial plan for a 63-year-old retiring in the next few months.
Okay.
His net worth is 2.7 mil. He's married and owns his own house. He's targeting earnings around 125K per year.
Oops, slow down.
And
So he's about to retire. What was his net worth, you said?
2.7 million.
All right. Okay, what else?
He's targeting earnings of 125,000 a year and wants to be as conservative as possible, but still hit his income target.
Yep. Cool. So let's put this client's risk tolerance around a 5, would you say? Maybe a 6? What do you think?
Yeah, 5 or 6.
Yeah, let's do 6 just because we can get a little bit more equity dividends that way. And I'm going to set the cash at 1% so that we can charge the fee, and we'll just let it run. So again, as it's doing this, it is looking at truly sound portfolio metrics, portfolio analysis to try to find a portfolio that's going to deliver this specific goal for the client. That's probably pretty achievable. That's what, like maybe a 4% yield off the top of my head. While it's thinking, I'm going to give it a minute. But the other thing you can see here is we talked a lot about how much kind of our logic is driven by macro behaviors, particularly because that's kind of what's going on in the moment of finance right now. You're not naive to that. And so we do have a handful of different kind of macro indicators over here on the left that are just a good dashboard. So you can see what kind of space our analysis is showing we're in from a regime standpoint. So you can see it's like inflation, growth. That's kind of where we are right now. We just came out of a deflationary growth period, well as some big movers. And then there's also a calendar that shows a bunch of macro events there too. So something to think about kind of as you're referencing when you sit down and log in, you can just kind of take a look at that. Portfolio is built, right? So it built it added these 3 different assets for us. We'll ask it to add a few more unless you're comfortable with a small diversification or a small number of positions. And then let's see what it gave us for analysis. You can see it's high confidence, right? So 85% plus. It's typically where we see a default. Just like if a portfolio manager came to you or an employee or an intern came to you with a particular piece of feedback or a chore you asked them to do, you'd say, all right, great, let me look through it and make sure it's right. Exact same thing here. Individual adjustments to portfolio strategy. It lowered from a 6 to a 3. We'll ask it to kind of move it back up, I think. I think we can move it a little bit more, a little higher for that. Conservative portfolio focused on income, focused on ETFs to manage fees. Gave us iShares, high yield bonds, and some treasuries. Yeah, so it was able to hit about a 4.6% yield. So now you as a wealth advisor, you get the opportunity to say, okay, great, I can go to the client and say we can be hyper conservative and still hit your investment goals, or we can make an adjustment to the portfolio and make a change. What do you think? What's your gut instinct? Want to add a couple positions?
Yeah, I would say more positions probably. I know this client is very interested in tech, so possibly some individual tech stocks if possible. And yeah, I agree with keeping it within the 5 to 6 range.
Yeah. All right. So we'll add the risk allocation to set. The client likes tech. Include okay. What else did you say? And then let's increase the number of positions to say 10 to 15. Let's say, yeah. Because 3 is a little narrow. Nobody's going to be thrilled that you brought them a 3 position portfolio with 3 positions. And we let it run. And so you can kind of do this ad nauseum, right? So you can hone this to be the exact portfolio that you want using plain English right in front of, you could do it in front of client if you wanted, but that's a little brave. But the important thing is you can do this in 10 to 15 minutes versus having to set up a meeting with your portfolio manager or your asset management team, talk through the client, have them think about it for 2 to 3 weeks, come back to you when they feel like it with a non-interesting portfolio that's really just not special at all. Immediately you can have this whole portfolio built for you literally in front of your eyes. So you can see it's currently adding some positions. We added some Apple, some Microsoft, some Google, NVIDIA, right? Some QQQ, get a little of that exposure. Yeah, job done. So it's going to kick out a written answer for us here in a minute that'll give us the exact justification for it. But just glancing through the portfolio, it seems somewhat sound. Well, it's finishing its last couple thoughts. You can see the actual allocations if you want. So these particular positions correlate to specific asset classes or sectors. So you can break down and see exactly how diversified a client is across the different sectors that they want. All right, it's finished thinking and talking us through everything. Tech focus. So it added in, it added Alphabet. Targeted 12 positions. Here's the allocations. Kept the risk profile the same. What do we think? Are we happy with this? Let's ask it to write our notes for us. Well, we're coming up on time, so we'll let you go. Let's make up a name for the client. I'm not going to make you say the client's name right now. Say David Cunningham. Right? So now it will write the compliance notes for me in a way that is truly compliant. And you can just copy and paste it into your CRM. For context, when I was in the industry, an example like this, starting with KYC data, portfolio input, feedback to make a couple changes to portfolio manager and back, that was a 3 to 5 day process sometimes. And here we've just done it in let's see, 11:43 a.m. It's currently 11:49, and my portfolio notes will be done in the next 2 to 3 minutes. So the amount of time saving and the amount of effort that is very suddenly available to you and the other advisors on your team is night and day. So here we go. Here's the profile and here's the client notes, right? Speaks about the KYC data that we put in. The more KYC data you put in, the more lengthy that portion will be. Portfolio composition, it talks through the actual exposures. It does the compliance check and makes sure that things are appropriate for the client and he's not over concentrated or too high a risk. Gives you a suitability justification, mentions a couple concerns that you can talk to the client about, or you can highlight to your compliance reviewer and make sure that the client spoke about this specific risk and the client was comfortable with the risks, spoke about this particular risk, the client was not comfortable with the risk, made that change the portfolio. And then you can stick them right in your CRM.